Welcome to All Things Policy, a daily podcast by the Takshashila Institution. We are a bunch of policy nerds based in Bengaluru, and we like bringing fresh perspectives to Indian affairs and Indian perspectives to global affairs. So grab a cup of coffee, sit back, and join us for today's chat.
Welcome to today's episode of All Things Policy. My name is Sridhar Krishna from Takshashila Institution, and I have with me Anupam Manur, who is a professor of economics at the Takshashila Institution. Welcome, Anupam.
Hey, Sridhar. It's extremely good to be here.
Thanks. So, Anupam, there's been a lot of talk recently about how the dollar's place as the dominant currency in the world is under threat. People have also been writing about a new world order where the dollar ceases to reign supreme. So can we go a bit back in history before all this? How did the dollar become the world's reserve currency? So if you look at this Mundell-Fleming paradigm, the importance of a country's currency in international trade is tied closely to its share in world trade. But if you look at the US dollar, the dollar enjoys a power all its own. So Geeta Gopinath recently wrote that the dollar's share as an invoicing currency is 4.7 times its imports and 3.1 times its exports. But when you compare it with the euro, for instance, the euro as an invoicing currency is just 1.2 times the share of euro country exports. Why is this the case?
So this is a long answer because since you invited me to go into the history of currency, which, by the way, I'm extremely passionate about. I love the history of the international monetary systems and how that's come about and so on. But, we can speak later about the pound and what happened there. But let's just go to the post-war period, right? If we look at how there was a gold standard, and that gave way to a gold exchange standard. So until then, a reserve currency didn't matter because gold was the reserve currency, right? Every country had gold and they could only issue currency that was equivalent to the amount of gold that they had. So it was a one-on-one kind of power. Now, we went into the world wars. The First World War, for instance, you felt suddenly countries realized that this kind of an equivalent system was no longer tenable because countries which were engaged in war required a rapid increase in currency in circulation so that they could then use that currency to, appropriately
Pay for things,
pay for the war, right? So pay for weapons, pay for their own salaries of people engaged in war, etc. So almost everybody broke away from the gold system, right? Everybody broke away from the gold system. They started just issuing fiat currency as such. But they kind of understood that this would be a short-term phenomena, that this would be something that they would only use in the war period. And so in between World War I and World War II, they kind of went back to some form of a gold exchange standard that didn't really work out very well. But again, that it was a brief period. And then after that came the Second World War, right? Second World War, again, everybody just went off script, if you please. And then that is when also, of course, the kind of supremacy of the United States and United States economy in the world started coming through because all the countries in Europe were engaged in war. They wanted to kind of print currency. So while they were trying to adhere to this gold standard, they didn't have enough gold. So they would borrow from the United States. So they borrowed money from the United States. And then basically, and then they would use that money to pay back the United States so that they could buy arms and ammunition. Right. So, and then what happened was that at the end of all of this, it's just that a lot of gold of Europe was deposited with the United States in exchange for this. And then post World War II as well, there was again relief, rehabilitation, there was reconstruction and development, all of that, where again, US was helping out the countries in Europe, which meant that they held on to more gold, right? So US just became the dominant currency in the world.
So it became like the banker for the world, the central banker for the world, if you will. Yeah.
And the banker for the world chose the currency for the world, right? In that sense, I mean, I'm simplifying things a great deal. We have to go into establishment of IMF, the plan by Harry Dexter White, and then the plan by John Maynard Keynes, and how those two things came. We can skip over all those, those gory details. But the end result is that the world went on to something called the Bretton Woods system. In this Bretton Woods system, basically, the rest of the world were pegged to the United States dollar, and the dollar itself was pegged to the gold. Right, so the dollar was kind of, in that sense, the supreme kind of currency. 1971, President Nixon broke that gold exchange window and said dollars are no longer redeemable by gold, and we went into a purely fiat kind of currency system. So there's a part.
He said, like, I don't need to give you gold in order to give you security for the currency.
Yeah,
The value of the currency is my promise. The promise of government of the United States should be good enough, is worth as much, worth anything that you might think of.
Exactly, right? So you don't, you can hold on to dollars, and those dollars are they're worth their weight in gold. That's what they were saying. You don't need to
Sure.
actually exchange it for gold, right?
Yeah.
And so the rest of the world actually broke away from this kind of fixed exchange rate systems to floating exchange rate systems, and they had to hold on to basically the United States dollar as a reserve currency. That's only one part of the story, right? We have to go into why do we even need this kind of a reserve? What is the reserve currency? And for that, we have to get into what is the function of money by as such, right? So, function of money is three things. It acts as a unit of value, right? That's how you measure everything, the value of everything. You need some kind of common currency that you can measure that. It acts as a form of like for payment. So, that's the second part. And third, it acts as a store of value, right? So, and that's what there is. So, the first two things, which basically acts as how do countries pay each other for trade that they engage in? Second, what is the currency that you use to kind of invoice this trade? And the third is what do you hold on to as like a reserve, as a value, as a contingency plan, right? So those are the three kind of questions. And the US dollar still plays a big role in all of these three things, and historically has done so, right? So it acts as a unit of measure. So you basically large parts of trade invoicing is done in US dollars, right? And that's kind of just you can think of it as a common language between countries. So if I say I'm going to give you X amount of certain goods, that X amount of certain goods comes through in, you need a common measure, right? You need a common kind of currency or language, and that just happens to be dollars. So that's the measurement aspect. And then, for trade invoicing, generally, what is the currency or what do you use for payments? You use the currency which is most widely accepted because it's not about anything else. Let's say you and I are trading, and you give me that painting that is, behind you as a currency. I'm going to say, I'm sorry, I don't accept that because I can't then pass it on to somebody else for buying something else that I need, right? So I'll only accept the payment which I know that somebody else will accept from me, right? And so therefore, countries prefer to trade in that currency which is most widely accepted, and that happens to be the dollar. So part of the reason is just how dominant is the US economy, and therefore all of that thing that you said about, what is the share of trade of the United States, and that is large, by the way. I mean, you don't have to look at beyond a point. The proportion doesn't matter, just the sheer volume matters. So while Europe might be 1.2 times its total share of trade, the United States share of trade in global economy is so large that even though that that is slightly disproportionate in terms of 4.7 times share in trade, that is still a very, very big number, right? So therefore, countries prefer to trade in and pay in United States dollars just because they know that I pay you in US dollars, you can take that US dollars and pay somebody else, right? It's going to be accepted. You're guaranteed that US dollars will be accepted elsewhere, and I think that is the most important point. We'll circle back to this later, if you please, on why is the US dollar so widely accepted. But for now, I'll pause for a minute.
Thanks a lot, Anupam. I think that was a good history lesson, a quick one. And so I like that thing that you talked about money. I mean, so it's very often we don't think about it. It's so real, but we rarely think about it as a medium of exchange, a unit of account, and a store of value. I think that's a very useful thing for everybody to remember. And you talked about how the United States has a very large share in global trade. But now let's look at China, right? So when you talk about the size of economy, when you look at share of trade, I think China has been playing an increasingly significant role in global trade. And but now the Chinese currency, as a result, and China is quite keen on making the renminbi the sort of a dominant currency as well. So, and it is increasing. I mean, there are lots of people are doing trade in renminbi. India, for instance, when India bought oil from Russia, it sort of did something around that, right? So I think like using those kind of things, do you see China emerging as a dominant player in this market and the renminbi becoming a much more dominant currency than it is today?
Short answer is no. But if you want me to expand on that,
Yeah.
so the first question is really, if you're talking about the rise of the Chinese renminbi, we should kind of equally ask, is the use of US dollar kind of reducing, right? Because those two things go hand in hand.
Fair.
Um, and we can circle back to this at a later point in much more greater detail about the US dollar itself. But for now, we need to again look at those three things separately, or at least two things separately. One as basically for trade, both invoice and payments as one kind of bucket, and the other bucket is just as forex reserves, right? Because those two things are they're very different kind of motivations for why countries would choose one currency over the other for those two separate things. So,
but aren't they all linked? But aren't they all linked? I mean, they may choose them, but if
no,
if essentially I do a lot of trade in the renminbi and I accumulate, if I export and like get paid in renminbi, then finally when I have to keep my reserves, then I have, if I want to go and exchange my renminbi for US dollars, then again I'm like,
so that is exactly what is happening. So which is why we need to separate those two things out. Now, of course, in macroeconomics, everything is interlinked with each other, right? But when you look at trends, I think it is useful for our analysis that we look at these two things separately, right? Or at least bring in that artificial separation just so that it will help us in our analysis. So start with that. So just let's start with the idea of the US dollar itself before going into the renminbi. That I think the share of US dollars as part of the forex reserves has been declining, and there have been ups and downs in the past as well. It's gone up to 80%, it comes down to 75%. It's gone, in the 80s, I think it went down as much as 50%. Then it increased back to 70%. Now it's about 60%. So on and so forth. But if you take any one particular window, it'll feel like it's suddenly fallen, which is what everybody is doing. If you look at what it was in 2000, which was as high as about 86%, and if you look at what's happening now, it's about 60% odd. So it feels like a drastic fall, but I just want to also give this historical perspective that there are movements up and down, right? When I say 60-80%, I mean, what is the share of the US dollar as a total of all forex reserves held by central banks? That's the number I'm speaking about. And I'm saying these things fluctuate, and right now it's about 60%. So for sure, it's lower than what it was earlier. And so that is one kind of idea, right? The second part is how much of the US dollar is used for the trade invoicing and trade payments. And that as well has actually reduced, right? It has reduced from about 88% to now it's reduced. I don't know what, it's difficult to kind of get a real number on it, but it has reduced quite a bit, right? And the next question is, if the US dollar is reduced, what has taken that place?
Right.
It is not the Chinese.
Correct.
Right? That what comes out is that there is no one clear winner that says this is the clear kind of, the currency that is replacing the US dollar. Not at all. In fact, it's kind of a bit of everything. So the biggest kind of winner, if we call it, or the replacement is the euro. Right?
Euro, yes. Euro is about 20 odd percent, right? 20 odd percent is the euro.
If anything,
and that was something that was expected, wasn't it? I mean, when the euro was brought in, people did say that this would come in and play a big role. So
it's played probably a slightly smaller role than what most people expected, but nonetheless, it is not insignificant, right? It's not insignificant. So I think that is your second biggest kind of this thing. The renminbi is very far behind in
I think it's about 2%.
Yeah. So if you look at global reserves, the Chinese currency occupies only about 2.7% of all global reserves held by central banks. And if you look at, the payment systems, so the headline number, what everybody talks about is global payment systems using RMB doubled in 2023. Sure, it did actually.
From 4%
but then
to
you
8%.
have to remember that it doubled from such a low base of 1.9% to now about 4.6%. So yes, the jump is significant, but then the absolute numbers is still very small. It's about 4.6%. So
it
you
sounds
use
like
both of these things.
Sorry.
And it tells you that it's not such a big number. And you throw in a little bit more kind of googlies and you say, okay, even that 2.7% of global reserves, you remove Russia, which is, there's a whole bunch of exceptional circumstances for which Russia is using more of the Chinese renminbi, the sanctions and so on. You remove Russia, and the number further falls to just about 1.6%, right? So that's really not a very big number. And so that is indicative of the idea of still how big a role does the US play. Let me also tell you, just if you put all of this together, I mean, if you want a headline kind of number for most people, right? Because it's difficult to think of all of these things in separate terms. If you take a headline number, that is, you take all of these different uses of a kind of a global currency, and then you just weight it, you take a weighted average, etc., based on different usage, then let me give you that number, right? Chinese renminbi counts for only 3% of kind of the use as a global currency. Japanese yen is ahead at 7.3%. British pound is at about 6.4%. Euro is about 23%. And the US dollar, right, is more than all of these currencies put together. And it stands at a whopping 69%. So that again tells you that, yes, while the share of the US dollar might be coming down, in just still absolute numbers, it is massive, right? It is still the clear kind of winner in all of this.
Yeah. It seems to be more than all these guys put together, as I think you'd written somewhere, right? But we all agree that while the dollar is dominant and will probably continue to dominate in the foreseeable future, it is also I mean, if you look at one decade over the next, etc., there is significant decline in the role that the dollar is playing in global trade and as a reserve currency and so on. But one other thing I noticed when you were talking was about the currencies that you mentioned. You mentioned the yen, you mentioned the euro, you mentioned the US dollar, you mentioned the British pound, and then you mentioned the renminbi. So if you look at the first four, they're all well-functioning democracies where rule of law is sort of quite prevalent, while not everybody understands China in the same way and knows what to expect when you sort of go with China. So is that the reason why the renminbi, despite the Chinese economy being so large, is that the reason why the renminbi may not be sort of being so successful?
Yeah, I mean, there are multiple reasons, really, if you want to look into why the renminbi cannot replace the US dollar so easily. I would first and foremost look at just this idea of capital account convertibility, right? Which is how easily can you convert the renminbi to any other currency for financial transactions. Right? So if I'm an investor and I've bought Chinese bonds, which is what I need to do as a global currency, right? If I'm an investor and I bought into Chinese bonds, and then let's say I smell that there is going to be a downturn in China, right? So I quickly want to exit. I want to sell all the assets, maybe stocks, maybe equity, whatever, right? Equity. Maybe I have a little bit of real estate. Maybe I actually have some factories. Maybe I have investment in debt. I want to sell all of that and exit the market.
Mm-hmm.
In China, I can't do that. I need permissions at various levels to be able to do that, right? So if there is a downturn, the clear kind of indication is that China would just shut down all of those financial transactions, and then I'd be trapped there, right? It doesn't boost my confidence that I can easily invest in China and exit when I want. Whereas in the US, at any given point of time, I mean, I can just up and about exit. Right? I mean, I can just pack my bags overnight and leave everything, sell everything and leave. And that is the necessary confidence. And that's the same problem with, why India cannot have an international currency that easily is because we don't have full capital account convertibility. It's a little bit worse in China because not only do you have the lack of capital account convertibility, but you also have very close monitoring of those capital account transactions. So which means that as an investor, you're always going to run the risk that the Chinese government is going to keep a very close eye on what you do with the money, where does it go, how do you exit, and a whole bunch of those things. So I think that is probably one of the biggest reasons why investors will not trust the Chinese renminbi so easily. Yeah. So that's the first big bucket.
Yeah, so when you're talking about that, I was thinking, yes, that's true. And it seems, I mean, all of us, when we just look at the US, we look at China, I mean, you know that your money, you just feel intuitively that your money is safer if it is in US dollars rather than renminbi, right? So I think that sort of, and it comes through, many of us may not be able to articulate it in as well as you did. But I think we all understand that it does seem logical. It is not counterintuitive to believe that. However, when Russia invaded Ukraine and the US imposed sanctions on Russia and made the dollar unavailable to Russia and Russians everywhere, is the weaponization of this dollar in this fashion not bad for the reputation of the dollar? Because the reason the dollar is so wonderful for all of us is because, like you said, you can just up and out anytime you want. You can take the money whenever you want. And then when suddenly they did this, does that not bode poorly for the dollar, as
Yeah.
the reputation as a dollar? Yeah.
Yeah. So I mean, okay. let me finish the China story first before coming to the dollar, right? So because I think it's required to give a holistic picture of that. So your capital account convertibility is one part of it. The other bits is just the strength of the Chinese institutions, right? We know, for example, even their exchange rate is not fully freely floating, right? I mean, it just quite closely managed, though it is freer than what it was before, but it's still quite closely managed. The second bit, and I think this is also important, even the stock market, for example, when there are crises, just the government can step in and completely stop trading, right? And they've done that on multiple occasions. So that as well is just something that it doesn't inspire confidence, right? So all of these kind of tight domestic financial controls are very prominent. And then listen, I mean, if for example the U.S. government tried to do it, somebody would move the Supreme Court to say to stop the U.S. government, the federal government. But in China, of course, that is a joke, right? The justice system is again broken. I mean, broken as in it will not do anything against the main government, right? So you don't have kind of recourse to that kind of justice or anything else if you're an investor where the government has just taken over your bit. And then the other big point is that the capital markets in China are very shallow. It's kind of nascent. It doesn't have sophisticated instruments in which you can invest in. There's not enough liquidity. There is not enough depth. So if you're stuck with something, you can't even sell and get out. So I think the corporate and bond markets or government bond markets in China is very nascent, right? It's not very. And the same thing again with India. It's not that the same. But the US financial markets is extremely deep, right? I mean, it's the range of financial instrument available in the US is just mind-boggling, and it doesn't have that. So you add all of these things together, the lack of the kind of a well-developed financial market. You throw in the idea that there is no capital account convertibility. Then you finally put in this idea that there is very low trust in the system, and you have almost deliberately badly designed institutional mechanisms, right? I mean, badly designed as in from an investor's point of view, but of course, extremely well designed from the CPC point of view, right? So you put all of these things together and you see that China is very far away from being a go-to kind of currency for either reserves or for anything else. It can make small kind of advancements, but I don't think it can replace the dollar in a hurry. If at all, as I said, it probably is the euro and yen and so on, which is at a much better position to take over. Let's come to the dollar. I think what you raised is an extremely important point, which is what did that Russian episode do? And if you ask me, some of the recent movement away from the dollar for both trade and reserves aspect of it is entirely because of the way that the US has been behaving, right? I understand why the US would want to impose sanctions on Russia because it's, of course, attacking Ukraine. I get all of that. But they don't want to get involved in the war. So they said, okay, we're going to do sanctions. But some of those designing of those sanctions were left a lot to be decided. It was not the most clever thing. I mean, in fact, I know. Why am I mincing my words? I think it is one of the most stupid things that the US government has done, where they froze the assets of the Russian central bank. This thing, because in one kind of move, they have spooked investors all across the world. They've spooked central banks all across the world, right? Because now, so listen, even though we say central banks hold foreign exchange reserves, we have to know that those forex reserves are actually held with the US Federal Reserve. It's kept in New York, right? So if the US decides to freeze those, and all of us, right, every single country will get affected. So now every country is questioning that. What if you're next? what if our assets are frozen because of whatever reason, right? I mean, now imagine India is, for example, we've conducted trade with Russia, right?
Right.
Is there a possibility that there are secondary sanctions on India? What if the US says, okay, we're going to freeze a part of your forex reserves? Right? I mean, it's a possibility. It's a possibility that we have to be very aware of. And that, obviously sends kind of shivers down central bankers' spine. So that is one of the biggest reasons why I think countries are moving away. They're thinking of diversification. They're thinking of, can we, move? I think the US has shot itself in the foot by doing something as stupid as that.
So basically, you're saying that there isn't a de-dollarization. It's not that the dollar is not going to be dominant, but there are definitely questions on the extremely high monopoly that the dollar seemed to be enjoying. That is is under threat, and there will be other currencies which will then
Correct.
find
So
its way.
let me put that in context again, right? Because many of the times these discussions on death of the dollar, etc., is made in completely arbitrary terms. So let me put all of that in context and say why. Okay, so let's start with that. You have the Russian episode. In fact, there was a kind of decline in dollar reserves held before that, but the Russian episode kind of really triggered things off. And because of that, countries started moving away. They started using other things. There are a whole bunch of newspaper headlines that come out saying BRICS want to start their own currency and they want to move away. ASEAN is going to do bilateral trade in their own currencies, etc. But
everybody said we'll invest in gold. Gold prices went through the roof.
Yeah, so there was a gold rush, by the way. Central banks bought a lot of gold. Sridhar, I know you've invested heavily in gold, and you sit on piles of gold at your home. If IT people are listening, please raid his house. Right. So, but yeah, and you benefited massively from that rise in gold prices. But so while all of that has happened, I think we also need a little bit of reality check, right? So India has been thinking of moving away from dollar, paying in dollars, etc. But the reality is that more than 86% of India's imports rely on US dollar invoicing, as in they pay in US dollars. Though only 5% of its imports actually come from the US, right? It's originating in the US. So does that make sense? Only 5% of our imports actually come from the United States, but 86% of our imports we pay in US dollars.
Yeah.
Right?
That's because we trust the dollar, right? We trust the value of the dollar. We trust by the time if I invoice someone and I'm like, I'm paying for it, or if I'm buying something from somewhere, I know that it's worth X amount of money. I know there is a stable currency. It's not going to go haywire on me. And therefore, I'll be paying the right value and not too much or too little. Yeah.
Yeah, correct. And so even just about, even our exports, about 15% of our exports go to the United States, but as much as, again, 86% of our exports, we invoice it in US dollars because we want those US dollars so that we can trade with others. It's the same thing for China, Brazil, large parts of South America, South Africa, etc. A disproportionate amount of their trade is actually invoiced in US dollars, right? And of course, even though we say price of gold has gone up, remember that gold is itself invoiced in US dollars, right? Crude oil is invoiced in US dollars. Nearly 88% of debt in the world is invoiced in US dollars, but has nothing to do with the United States, right? As in, there is no US domiciled issuer nor borrower. So, I mean, you can think, even if, I don't know, Somalia is giving a loan to Ethiopia, or a person in Somalia is giving a loan to a person in Ethiopia, it will be priced in dollars, even though it has nothing to do with the US dollar, right?
Yeah.
I can give you more data. I mean, I can inundate you with data, but in 2022, for example, the US dollar was, at least on one side of the transaction, for over 97% of the Indian rupee, 95% of the Brazilian real, 94% of the Chinese renminbi, and 88% of South African rand. Right? So it just again tells you that even those currency exchanges that happen, US dollar is at least on one side of it, of the currency. So it just tells you how big is that the role of the US dollar, right? So
and you were talking the other day about the foreign exchange market, and you said what, 97%?
Of all the forex market is crazy. So the US dollar still plays a heavy role in all of this. I
Yeah.
actually forgot your primary question.
No. I think like we talked about how Russia invading Ukraine and like
Yeah.
the decline of the dollar, the loss of reputation of the dollar as a consequence of that, and then we also said that there are cases where Indian refineries are paying for Russian oil using the yuan. All these things, all these symptoms of like the decline of the dollar. But I think we agree based on whatever you said that yes, the dollar may be in decline. Yes, there might be valid, legitimate reasons for people to want to have reserves in other currencies. But if you look at trade transactions and so on, and like you look at the markets, I mean, there is absolutely no comparison to
Yeah.
the dollar when it comes to the
Yeah.
currency in which everything is invoiced or the currency in which every
I
trade
think,
happens.
can I explain? I mean, why that is the case, right? I think the Russia ruble trade is a classic example, as you said. So we try to do a Russia ruble trade, right? So we said
Yeah,
we'll buy oil from Russia and we'll pay them in rupees. And Russia initially agreed to it before then breaking away from it. The simple reason is that, okay, we buy oil from Russia, we pay them in rupees. They keep that rupees. There is some complicated mechanism of Nostro account and Vostro account and so on that we don't need to get into
yeah,
all of that. Let's say Russia keeps rupees. What does it do with that rupees? If it
yeah,
buys something from, I don't know, from Mongolia, it can't pay Mongolia in rupees because Mongolia will not accept it, right? So then the only thing that Russia can do with those rupees is buy things from India. But there are not enough things that India produces that Russia wants,
yeah,
right? That is the big problem. Right? In just one kind of explanation, that is exactly what we want. So any kind of cross-border uh, currency kind of agreements between any nations will ultimately end up with the same problem unless they have this beautifully well balanced trade, which doesn't happen by right.
yeah.
If they're going to buy exactly the same amount from each other, then it's okay. You can do it in local currencies, but far too often one country will have a surplus over the other, and
Hmm.
when you do, that currency will then you don't know one country
Then
will
you
not.
don't know what to do with the currency, and therefore you end up paying more for goods that you didn't want. So I mean, like you want 100 pairs of shoes, you will pay like the price that you would have normally paid for 10,000 pairs of shoes because you've got the cash and you don't know what to do with it.
Correct.
So
But I want to bring in one other aspect to all of this, right? As to
yeah,
why the relative decline in US dollars. Because there are some scholars who say this has actually got very little to do with the entire Russia episode. It's got very little to do with the sanctions and so on, right? Now, we
hmm,
can never know what is the true motivation of why countries behave the way they do because they don't put out press statements saying we are trading in some other currency because we don't trust the US dollars. But we have to guess at it, right? But I think this is very important to speak about. The reason why we need to speak about it is because we need to know that whether that receding of the share of US dollars to whatever extent, whatever small extent, is a temporary one or a permanent one. Now,
yes,
permanent one would be if there is a loss in trust,
yeah,
right? But some scholars, and actually quite a few scholars, and I seem to be one of them, would argue that it's got less to do with the loss in trust as much as just an increase in interest rate. So it's a purely financial reason why people are
true,
using dollars less. Now, US has been going through quite a prolonged period of high inflation. So
yes,
during COVID, for example, they did a very easy monetary policy. They just basically did again a lot of quantitative easing. They reduced interest rates, etc. And once they got out of COVID and the US economy started growing, and then now they've had a wonderful kind of period of high economic growth
high
that
growth,
has
yeah,
also brought about quite high inflation. And
yeah,
so that high inflation, in order to combat that high inflation, they have to raise interest rates. And
right,
interest rates are the highest it's been in the United States since, like, I think the 1980s, right? And so the Paul Volcker era of 1980s. So what does that mean? Once the US interest rate has increased, two things happen. One, investors around the world will want to go back to the safest haven, right? Which is the
yeah,
US dollar. And now that the dollar is giving you extra returns, it seems to be a no-brainer. So as it is, the dollar is safe, but it's also
yeah,
giving you good returns. So
yeah,
everybody is rushing back to the US dollar, right?
yeah,
And so other countries are now kind of tired of this. Are they tired of this? How their countries and their currencies fortunes fluctuate according to US monetary policy, because US monetary policy is strictly domestic.
Yeah.
They will do based on their own interest. They don't care about what happens to the rest of the world. But the rest of the world is now beginning to say, okay, why are we this vulnerable to US monetary policy, right? Because what happens is that once the US raises interest rates, investors exit the market, which means stock markets can crash, which means that you'll suddenly have an appreciation of the US dollar and correspondingly a depreciation of your own currency. Once your currency devalues, suddenly your imports become more expensive. If your imports become more expensive, then your current account balance will go
Deficit
down.
becomes worse.
And that has massive repercussions, right?
Yeah.
So that is one reason why countries are trying to move away from the US dollar. But the second important reason,
The renminbi's interest rate is now lower than the
it's
US
2 percentage
Treasury
points lower than the US dollar, right? So,
Yeah.
which is why at the margin, countries might want to borrow in renminbi and not the US dollar. And so, the second one is exactly that the borrowing cost matters, right? So
Yeah.
now borrowing in US dollars is a lot more expensive than it is with, let's say, the renminbi, right? So that is the second reason why there might be a temporary blip where countries are choosing to borrow from some other currency and not in the US dollar.
That's a temporary thing, right? That's
It's a
temporary.
temporary.
Yeah.
Because once inflation comes down, US interest rates will go down. They're already speaking about maybe at least one interest rate step down this year and maybe 2 or 3 in the next year. And once interest rates reduces, probably everybody will go back to the dollar and it will be, this is a temporary blip. We don't know that. We have to see, how that plays out.
Yeah. So when you talked about this, I was thinking about this Triffin paradox that you mentioned some time back and how the dollar being the world's currency is both good and bad for the US. So in what way is it good and what way is it bad? Can you sort of explain?
Yeah, so there's an economist called Robert Triffin who came about with this idea that if you're a country which has a currency that is a global reserve currency, then it's both good and bad. And Triffin had initially said that it is almost impossible to be a global reserve currency for very long. Now that's clearly kind of been disproved, but the idea still kind of is attractive, right? And it still stays. So if you have a global reserve currency, then the onus is on you to make sure that the wheels of trade are in perpetual motion, that, whatever you're providing the lubricant and oil for trade to keep going on. And that means that basically you are, supplying enough currency to the rest of the world, right? Because if yours is the currency in which invoicing is done, in which payments are done, then there needs to be enough liquidity. Now, how do you have enough liquidity? You basically print money. Now, when we say print money, it doesn't mean in actually using the printing press, but it basically means that you will denominate, right? You will issue debt. So the US government will issue government bonds, which the rest of the country will buy. And so they get basically dollars in return, right? So that's basically holding those forex reserves and so on. So now there is liquidity in the system, because they're issuing debt, they're getting dollars, that dollars is in circulation and all of that, right? And other countries have basically a claim on those dollars, right? So through the debt. So what that means for the US is that they have this wonderful scenario where they have access to the cheapest loan possible. And this raises a lot of other developmental questions, etc., because, the rest of the world is perpetually financing US consumption. And that is also an equally important thing, right? Because the US has to keep consuming for the rest of the world to have enough dollars, right? So the way it works is this. US issues government debt. The rest of the world buys that government debt, right? So US now has basically cheap loans. They get very cheap loans. What do they do with that loans? They basically buy goods from other countries, and they buy, basically then use that dollars and gives it back. So literally this is what happens, right? Let's say country A, whatever you want, buys US government debt and gives them dollar in return. US then uses their own dollars to then buy goods from country A. And country A now has those dollars to use for other kinds of trade, right? This is the way that the system works. Now, I don't want to get too much into the balance of payments, etc. But the paradox here is that the country which is issuing the reserve currency has to almost perpetually run a trade deficit.
Which means they have to import much more than they export.
Correct.
Right? Unless they do that, they won't be able to issue this debt.
Correct. Right? Because the way that, you can think of this in two ways. One, if purely from a balance of payments perspective, when you issue debt and money is coming in, that means you have a capital account surplus.
Correct.
When you have a capital account surplus, you must have a current account deficit.
Of
Right? Because
equivalent
balance
amount.
payments always balances.
Yeah.
So that current account deficit is basically that you import more from the rest of the world than you do. Now, from a practical perspective, if you want to understand, forget about accounting, but if you want to understand this from a practical perspective, it just means that, when you issue currency, right, it necessarily means that, your and the rest of the world is basically investing in you, then there's an appreciation of the dollar. And if the dollar appreciates in value relative to other currencies, then basically your imports become uncompetitive, right? Your imports is cheaper and your exports is more costlier, right? And so the rest of the world will not buy from you, but for you, it's very cheap to buy from others. And that's what US does, right?
Yeah.
The other reason, and I was waiting for you to come to this is very important the way it plays out. And the reason why the renminbi cannot do this is because the China has a perpetual current account surplus,
Correct.
right? And not a deficit. So the China is a factory to the world, whereas the US is a consumer of the world, right? And if you are a reserve currency, you almost need to be a consumer of the world. You need to have a massive market. You need to be buying things. You need to run a current account deficit, which means basically you use that dollars and you give it to others. They'll use that dollars to invest back in you. That's what happens in this world. I don't know if that made sense.
Yeah, it made absolute sense. I mean, I think, at least to me, I see that, if as long as China continues to be the factory to the world, and runs a huge current account surplus, they will not be able to issue enough debt that somebody else can buy. I mean, they just don't have that ability to create that, because what will they do with all the cash that comes in, because they don't have that consumption to sort of justify that. So the problem is that, but the US, on the other hand, because it's the reserve currency of the world, is running a current account deficit year after year. And then people talk about this huge national debt that US has, and how is it going to service that debt? Will the dollar be able to service it? Will the US government at one point throw its hands up and say, I'm not able to service this debt, right? So I think that's the kind of worries that people have, but I think quite unfounded at the moment, but definitely something that that we think about. So before we conclude, can you sort of talk a little bit, a couple of things that I want to know. One is, before the dollar, the British pound was the reserve currency of the world, right? What happened to it? Why did it stop being the reserve currency?
So the British pound was the reserve currency in the world because it was the largest economy, the biggest trader, and the deepest financial markets. All of those things that we, wax eloquent about the US dollar, right? The British pound was playing that role. That started slipping away even in the early 1900s. So many people think it's World War I, but it actually started happening before that, where the gold standard itself started weakening. By the way, Britain had a massive inflationary episode in 1907, which led to the depreciation of the pound and then a kind of breaking away from the gold standard, etc. Right? So earlier it was that. So even the Indian rupee was pegged to the pound was pegged to the gold, and so Indian rupee could be easily exchanged to gold. Right? But now that started slipping away. Then, of course, the two world wars, where Britain was obviously in many ways it's and the decline of the empire, all of that put together, it just meant that Britain was no longer at the center of the world economy, and US had already taken over, right? And so it just clearly that. So you have to be a big player in the world for you to play that role of a reserve currency, and I think that's fairly well established.
And that's far away for Britain. I mean, India has overtaken the UK in GDP terms. So from that perspective, I mean, its role of the UK in world trade is also much lower, right?
Yeah. So it'll still continue to play a big role in international financial markets. The pound is still a very strong currency. It has very good financial markets.
Because there's trust in the currency and the law and order in the state and all that.
But it can't replace the dollar.
The dollar. No way. Yeah. So what about crypto? So do you think crypto is the future?
No.
So I mean, you were showing me all those little wallets in which you have all those cryptocurrencies, right? So
no, Sridhar, because crypto is illegal. Just like you don't have gold stashed under your mattress, I do not have crypto.
Thank you. I just waited for you to say that. Yeah. Anyway, so tell me about crypto. Do you think crypto can pose a threat to the dollar in the future? I mean, at the end of the day, currency is all like just make believe, right?
No. Crypto has just far too many problems for it
Because
to
the
be.
advantage, no, the reason I ask about crypto, sorry, before you go, I mean, the reason I ask about crypto, one of the reasons why the dollar as a medium of exchange has a dominant currency is like it's large, and therefore, like the cost of transaction cost in dollars is very low compared to transaction costs and other things. But then the crypto will be even cheaper from a transaction cost perspective. So that's why I
Yes.
asked. Yeah.
Two things are important, right? One is transaction cost for sure, but second is liquidity. Now, crypto cannot give you any way. I mean, it's negligible in terms of liquidity compared to the US dollar, right? I mean, for everybody to be able to pay in a particular currency, that currency has to be widely acceptable. And crypto is not that, right? It doesn't give you that liquidity. I mean, that's why I say, I mean, I don't want to comment on whether crypto is a good investment opportunity, whether you want to use it for paying whatever else, all the shady things that you do, Sridhar. Yeah, you might pay in crypto, but as a reserve currency, I think it's a joke. Okay, it can't go anywhere there. So there's no liquidity. Second, it's far too volatile. Imagine and this is what happened with was it Ecuador, right, which went all gungo about crypto, and then the crypto
Yes,
price fell by
Ecuador,
half.
yeah.
And then there's just their national economy was ruined, right? And imagine,
But then it's gone up again.
yeah. So,
It's like going through the roof. If they managed to retain it, I don't know what happened.
Yeah, but as a central bank,
They don't want to take such risky bets, right?
Exactly.
Absolutely.
Right? You can't do that. And then there's also, which crypto, right? Okay, Bitcoin, but then there are, the entire things which have just crashed, Luna, whatever, it's just gone, Terra, Luna, whatever, Mars, etc., has just gone. And so which do you invest in? And it's this the third part, right? So one, as I said, liquidity. Second was just volatility, far too volatile. And third is trust. Do you trust these crypto? You trust the US dollar because you have the US government behind it. And importantly, whether we know it, whether we like it or not, there's a US military behind it. Right? Who will trust cryptocurrency? Right? If somebody just runs away with that money, with something else happens, whatever, there's nothing you can do about it, right? So I know it's a very romantic notion, but it can't replace the US dollar as a currency.
Absolutely. I agree. And finally, what should India do to reduce the dependence on the dollar and the vagaries of US policy? Should it work with China and support the adoption of renminbi, or
Absolutely not. So I think India is caught in somewhere in between. I do think that, like many other countries, given what the US is doing, and now that the US is no longer as trustable as it was once upon a time. Now, especially if Trump comes through, right? I shudder about it, but I don't know if it's whatever. Let's not get into US politics, right? But if Trump comes through, I don't know what other crazy things will happen with the dollar. What if again he says, "Oh, why is the dollar being used? Let's freeze whatever other countries." I don't know, right? So I think it makes sense at the margin, at least, to start thinking about this thing. But at no point should we support the adoption of renminbi, because if you're just looking at trust, any Indian would trust the renminbi and should trust the renminbi far, far, far lower than the US dollar. Right?
Absolutely. Yeah.
So in that sense, there's no way that we should get caught up in this scenario where we are using the renminbi and adopting and promoting its adoption across the world, or ourselves adopting it. I think that makes no sense. China is our adversary, and we should not be holding important assets of our adversary. That's, I think, just a no-brainer. What should we do? I think we can, one, diversify within the pool. So hold more euros, yen, pound, even Australian dollar, Swiss franc, Canadian dollar, any of these things. Maybe just do a little bit of asset reallocation within that, right? That is one. Two, I think we have enough of a foreign currency treasure chest for most contingencies. So this is an off-field idea. I know most people will not agree with me on this, but can we start using that forex reserves for other things, right? Make other strategic bets. One is, can we start creating a sovereign wealth fund and use some of this money in those purposes? Can we use that money to buy a cobalt mine in somewhere in Africa, right? Not cobalt or copper.
Lithium is the next thing, right? So we need lithium.
We start doing some of those things with our forex reserves, which, I know that traditionally, I've not thought through the mechanics of this, right? Usually a sovereign wealth fund is when you have a massive current account surplus and you use that. But we do have a massive capital account surplus, right? So can we use that surplus money in our forex reserves at the margin? I'm not saying if our total is something around $650 odd billion, etc. Can
That's
we
what we
start
have,
with a $100 billion fund and use it for strategic purposes? So, these are the ways in which we can start diversifying.
Brilliant. Thank you very much, Anupam. This was a very enlightening and, as always, a pleasure talking to you. Thank you very much. And thanks to the listeners for listening in.
Yeah. Thanks, Sridhar. Be careful with all your gold and crypto assets.
Okay. Bye.
If you liked our show, dive into Takshashila's research on technology, strategy, and economic affairs. Check us out at our Twitter handle @TakshashilaInst or our website takshashila.org.in.